Good morning, everybody. Happy Monday. It's January 12th, 2026. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We're bringing to you news and notes about markets and trading, and kind of try to give you an edge, a little bit of a leg up or a head start into the trading day. Going to be a busy week, of course, with earnings coming out from some of the banks and financials, so the biggest names in those groups: JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, Wells Fargo, Citigroup also reporting, and a few others as well. Taiwan Semi will be out Thursday morning before the market opens. So what do we got going on here? So we also have a big options expiration coming up on Friday. What is that? That is the January options expiration, where we're going to have a lot of leaps expiring on the 16th of January. So what are leaps? Those are long-term equity appreciation instruments, which we have a service that leap service that buys these and sells other options as well too. It's been a great service. We started it last year, up 106% in 2025. We'll have a webinar coming up there, coincidentally, about leaps on January 21st. So keep your eyes out for that one on social media and watch your emails, because there'll be a link for you to join it. It's our most popular webinar of the year, so something for you to learn about as well too. So leaps will be expiring this coming Friday on the 16th. And it's going to be probably quite a volatile week. We see volatility right now. The VIX is up a little bit today. It's up about 8.5%, 9%. It did close under 15% on Friday, and it was hovering under there for a couple of days last week. We did have really good. I want to show you something as well too on the technical side of things. We did have really good breadth last week, save for one day. One strong volt here, and there. Ticks were real strong as well too on Friday. Volatility again down about 14%. So that's just something that we have to understand and deal with, that when the markets get a little bit too complacent, when they get overbought like they are right now, we're going to be vulnerable. And what are we vulnerable to? So today, well, obviously the futures are down 37 handles, NASDAQ down about 190, and the Dow Industrials down about 316, though a Walmart, which is in the industrials, is up nicely today, up about 3% as well too, up to $118. We should see a little bit of a pullback here in the next couple of days, right? Let volatility rise a little bit, and then as we come close to the weekend, right, we have a 3-day weekend coming up with Martin Luther King Day. Markets are closed on Monday, the 19th. We'll see a receding level of volatility into that. So I don't know where volatility with the VIX is going to go over the next couple of days, 16, maybe 16, 17%. If we maybe retreat a little bit after that. There's a lot of economic data, but a lot of Fed speak this week. A lot of Fed speakers will be out talking about the economy, Fed policy, and other things as well too. So pay attention to what's going on. I listen to all these Fed speakers and what they're saying. Read about what their thoughts are as well too. The next Fed meeting will be at the end of January. Of course, I'm sure many of you know that there was some news over the weekend that the Justice Department is investigating criminal investigation on Chair Powell and the committee as well too, the Federal Reserve, on their budgeting or so forth of the new building that is going to be built for the Federal Reserve. I don't know where that's going to go, but we do know one thing, and that creates a lot of uncertainty, but we do know there's one thing that's certain, right? That Chair Powell his term will be up in May, and he will be replaced, right? That's for sure certainty is going to happen. And we don't know who that replacement is going to be. Again, it's more uncertainty, but we do know there's going to be a replacement. And we do know that monetary policy as it is today is going to likely change quite significantly in terms of style and technique and pattern that we've been used to for years and years and years, right? I'm afraid that that's the road, that's the path we're going down, and it's probably not a good path, but it is what it is. That's the markets that we deal with, and that's the situations that we have, and all we need to do is adjust ourselves and make ourselves well enough to trade around the changes of what's going on in the Federal Reserve and the markets, right? So this week again we have we have earnings coming out from J.P. Morgan and Delta tomorrow morning. Keep an eye on those. Bank of America on Wednesday morning, along with Citigroup as well too. So economic data. Let's take a look at some of that coming out this week. We have some again Fed speakers today, and a couple of tomorrow. We have CPI tomorrow morning before the open. That's for December. We also have retail sales and the PPI coming out for November. That'll be out on Wednesday. Thursday, jobless claims, Empire State, Philly Fed, and some other industrial production, manufacturing numbers coming out on Friday morning. So it's going to be a busy schedule this week. Pay attention to what's going on in front of you, and it's going to be very important to adjust to yourselves what's going on. And I'm going to preface this again, as I say all the time: keep some flexibility there, have some puts on. We have some puts on. We added some towards the end of the day on Friday, and happy we have those on. But just take some cash, put it in, take some profits off the board, have some cash, so forth, and just be flexible as much as you can here right now. There's going to be another move up, but as of right now, I think we're going to come back down and test some support levels. Look at the S&P 500. Look, we're far stretched above this 50-day moving average here. The Russell 2000, right? Let's look at that one. IWM. Look at that. Look how far away it is from the 50-day moving average. So if you think of a moving average, like the 50-day or the 200-day moving average, as a magnet, pulling the price back or pulling it up, right? It's a magnet. So you have to think that, you get this far stretched away from the moving average, you're going to pull right back down again, right? Same with the S&P 500. Not nearly as far away from the 50-day moving average as the Russell 2000, but we are still in a bull market. We're making higher highs, higher lows, and we are at all-time highs on the S&P 500. So be careful here. The 50-day moving average all the way down to 68.18. That's about 2.5%. It's going to feel like death because it's 150 points down below. So if we move down 150 handles on the S&P 500, people are going to say, "Oh no, it's the end of the world." Of course it's not, right? So just come back and down, testing it like we did in the middle of December. That felt awful, right? From 6,900 all the way down to about 67.25, right? We were down 175 handles in about 5 or 6 days, right? People thought, okay, that's the end of it. No Santa Claus rally, blah, 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 right? But we've bounced right back again. I suspect that we could take a path down here. Not that far. Take a path down here, come back, bounce here, over here, right? See what I'm talking about here. So that could be the path that we take over the next, 3.5, 4 weeks. So we'll see what happens. So again, just maintain maximum flexibility, have a lot of cash on board, and be ready for the next move. And earnings season, oftentimes very positive. And like somebody said to me many years ago, do you really want to be short during earnings season? And the answer to that question is emphatically no. Have a great day. I'll see you guys all back on Thursday. Trade well. Bye.
Oh, this dude is out of sight. Everything he does seems to come out right. Once I went to hear them play at a club outside of town. I was so surprised. I was hypnotized by the sound this cat put down. When I saw this short fat guy with the man between his toes. Hey, I'm not so hard.